When we think of commodities, we often imagine vast markets where goods essential to our daily lives and economies are exchanged. Commodities are raw materials or primary agricultural products that can be bought and sold. They are fundamental to global trade, impacting everything from the prices at the gas pump to the cost of a loaf of bread. These commodities are generally classified into three broad categories: energy, metals, and agricultural products. Each plays a unique role in economic landscapes and investment portfolios around the world. Starting with energy commodities, these include oil, natural gas, coal, and increasingly, renewable energy sources like wind and solar. Oil, often referred to as black gold, is particularly influential, affecting various sectors of the economy due to its integral role in fueling transportation and manufacturing. The variations in the cost of oil can have a cascading effect on global markets, influencing everything from the cost of travel to the expense of goods manufacturing. Natural gas, while cleaner than coal, follows a similar trajectory, with its demand growing as the world seeks more environmentally friendly energy solutions. Metals, another critical group, include industrial and valuable metals like platinum, silver, gold, iron, copper, and aluminum. Gold often captures headlines for its role as a haven during economic uncertainty. Investors flock to gold when they seek to protect their wealth from volatility in other markets. On the other hand, industrial metals are foundational to construction and manufacturing. The price of copper, known as Dr. Copper, because economists say it has a PhD in economics, is a leading indicator of economic health due to its widespread use in electronics, construction, and power generation. Commodity trading is perhaps the most important activity undertaken on a worldwide basis that involves the trade in raw materials and agricultural and other primary products necessary for human existence. From ancient times to modern markets, commodities have shaped economies, influenced geopolitics, and driven technological advancements. The history of commodity trading traces back 4,500 years to ancient Sumer, evolving through the Middle Ages with the spice trade and Silk Road, the Age of Exploration's New World commodities, the Industrial Revolution's rise of coal and iron trading, to today's sophisticated financial instruments and global markets. In the global economy, commodities serve as building blocks for everyday products and act as economic indicators. For example, oil prices often signal economic activity. Resource-rich nations gain geopolitical significance through commodities, which drive international trade and serve as investment assets for portfolio diversification. The commodity sector significantly impacts employment and industrial activity and is central to sustainability debates. The basic principles of commodity markets include the standardization of goods for efficient trading and supply and demand as primary price determinants. Key market participants include producers, consumers, traders, and investors. Futures contracts are used for hedging against price volatility, while speculation plays a role in adding market liquidity. Global factors such as politics, currency fluctuations, and economic policies influence commodity markets. Major global commodity exchanges play crucial roles in the market. The Chicago Board of Trade, CBOT, the oldest futures exchange, focuses on grains. The New York Mercantile Exchange, EVIX, specializes in energy and metals, while the London Metal Exchange, LME, deals with industrial metals. The Tokyo Commodity Exchange, TOEM, provides insights into Asian markets, and the Shanghai Futures Exchange, SHFE, has a growing influence on global pricing. The Intercontinental Exchange, ICE, operates worldwide, dealing with various commodities. The legal and regulatory framework governing commodity trading aims to prevent manipulation and ensure fairness and transparency. In the United States, the Commodities Futures Trading Commission, CFTC, plays a pivotal role, overseeing the trading of futures contracts and options. Europe follows regulations under the Markets in Financial Instruments Directive, MiFID, and the Markets in Financial Instruments Regulation, MiFIR. These frameworks include detailed reporting requirements, crucial for ensuring transparency, and monitoring markets for signs of manipulation or insider trading. Regulations also address the management of derivatives to prevent excessive speculation that could create systemic economic risks. The framework extends to physical trading of commodities, involving international trade laws, customs regulations, and bilateral trade agreements. Consumer protection is another significant focus, ensuring that commodity prices reflect true market fundamentals rather than unfair trading practices. Enforcement of these regulations involves monitoring market activity, investigating breaches, and imposing penalties ranging from fines to criminal prosecution for serious offenses. International bodies like the International Organization of Securities Commissions, IOCO, provide global standards for commodity derivatives markets, strengthening their transparency and supervision. Commodity trading remains a dynamic and crucial aspect of the global economy. As we face new challenges like climate change and resource scarcity, understanding these markets becomes increasingly important for investors, policymakers, and consumers alike. The complex interplay of historical context, economic importance, market principles, global exchanges, and regulatory frameworks continues to shape the world of commodity trading, influencing everything from daily consumer goods